And if I were a sell-side analyst and I had the opportunity to ask Jensen on the earnings call tomorrow night, any one thing, Scott, it's exactly about these concerns. Yes, of course, we all want to know about gross margins, et cetera, but what we actually want to hear him weigh in on is the depreciation debate that sparked this latest sell-off. We want to know, Jensen, you have openly mocked people for using previous generations of your equipment, of GPUs. You have sped up the upgrade cycle to once a year from once every 18 months or once every 2 years. Congratulations. How do we square the circle with companies that are in the cloud, the hyperscaler or the neoscaler, who are talking about 5 and 6 year depreciation schedules? Can you harmonize those two things in a way that makes us all feel comfortable that we're not going to have that hiccup? And I don't know if someone's going to ask him that question, but that is the only question that I really need to hear from him tonight.
Tomorrow night. Might now. Do you have any concerns whatsoever about the so-called circular deals that we've seen? And today is another example of it. Here's what we got earlier today, okay? You stay with me. Anthropic is going to spend $30 billion in compute through Microsoft and NVIDIA. NVIDIA is going to invest up to $10 billion in Anthropic. And then Microsoft's going to invest up to $5 billion in NVIDIA to complete this latest circle. You have any issues with that?
I'm paying attention to it, and we can't ignore this circular revenue stream. And the comparisons that many, including me, have made is this exactly like the fiber optic networks that were being laid down in 1997 to 1999? To that, I will say this. At each step in the arc along these circles, there are positive returns on investment being generated. That was not the case at the end of the fiber network layout, where we had 75% of those fiber optics not lit, not generating any revenue at all. Could it possibly end up that way with the artificial intelligence build out the data centers? It could, but the answer to that is not going to be known for 2 years. These things are still being built. The fiber optic networks had been laid and were found out to be useless, and that's when the bubble popped. We are nowhere near that right now.
Could I jump in there for a second? I think that we're talking about the circular deals as one collective, and I think that's a mistake. I think when you look at a company like CoreWeave, for example, that's leveraged to the hilt in order to make these investments in NVIDIA-backed startups to buy NVIDIA chips, that circular logic does start to look a little scary. You think about OpenAI and all the commitments that it's made and all the questions that were asked about it. I get why there's concern there. But if you look at a company like NVIDIA, for example, which is investing directly into its next generation of customer, I think that's perfectly logical. They can't continue to be but so reliant on Microsoft and Google and whoever else for their Meta, for example, is like 14% or so of their revenue base. They have to be looking for who's going to be their next customer. And so investing in a lot of these other startups that have the wherewithal, the capacity to be able to generate the compute to turn around and buy new GPUs, I think they have to. And they have the free cash flow to do it. They've got to do something with the cash that they throw off. So I think we have to separate some of these circular deals from each other.
So
folks are focused on this one. Between today's new deal with Microsoft and Anthropic, last month's GTC conference, what's left for NVIDIA to surprise the street with? Well, Christina Partsinevelos is taking a closer look. And Christina, what are you finding?
Well, the setup right now just feels a little bit like the repeat of last quarter, with some recent shakiness in investors' confidence overall in the AI semi-trade. And you can see that in this week's sell-off, for example, for NVIDIA shares down about 4% week to date. And the market once again looking to NVIDIA to come and save the day and turn sentiment around. But shares really have barely budged since the August earnings report. You can see up almost 1%, underperforming Broadcom, AMD, Intel, even the SOX ETF on your screen, which is up almost 12%. So the fireworks just might be missing tomorrow afternoon. That's because at the end of October, you brought up the GTC conference. NVIDIA's CEO revealed at that conference $500 billion in cumulative chip orders stretching through the end of next year. The stock actually hit $212 the next day on October 29th, an all-time high. And now it's down roughly about 10% since that date. And that was unusually specific for NVIDIA, breaking from the typical 1 quarter at a time guidance, instead providing a forecast through all of next year. There's another dynamic at play as well. If NVIDIA's beat is too strong, for example, let's say it's $3 billion or more, it could amplify concerns that AI spending has just gotten excessive, which would, feed into the bear narrative. But if it's just a modest beat, let's just say $2 billion, investors might read that as growth normalizing faster than expected. So almost a Goldilocks scenario. And Wednesday's report really becomes more about validating what NVIDIA's CEO already said than revealing anything new. If, though, NVIDIA can give investors more clarity on the longer-term backlog, the way competitors like AMD have, and Broadcom, talking about their multi-year visibility, aka backlog, that could shift sentiment to the upside for shareholders.
Yeah, it's been really fascinating to realize that at least over the last couple of months, NVIDIA has been underperforming some of the other big chip names here. Is China going to factor into their forecasts or analyst estimates here, or have we been completely de-risked in terms of what that means for revenue?
China's completely taken out of the equation. It hasn't been modeled in with any of the sell-side, buy-side research. I doubt at this point that China would even come up. Well, it'll come up, but I don't think it's going to be a revenue contributor in the near term, given the licenses issues. We saw with AMD, too, that they announced that they are working through their licenses, which should be a positive for NVIDIA, but that takes time. There's a lot of red tape. Having said that, it's still quite impressive when you factor out a portion of the world that used to contribute, let's say, 18 to 20% of total revenues. You take that out, and NVIDIA is still able to beat by $2 billion, because they're seeking money elsewhere from either hyperscalers or sovereign AI. That's absolutely incredible. They're still able to do that. Having said that, the magnitude of the beats have come down, overall, investors are starting to think, what upside do I see in NVIDIA shares right now when I could turn to maybe AMD, where the EPS growth might be higher? I can turn to Broadcom, again, where the EPS growth might be higher. And so that seems to be the sentiment going into this earnings print this time around.
All ahead of that NVIDIA result. Let's talk more about that and more that matters to your money with our friend Steve Sosnick. He is Chief Strategist at Interactive Brokers. And Steve, welcome. I'm looking at your most active stocks. NVIDIA, number 2, maybe with a bullet. How big of a deal are these earnings going to be tomorrow night?
Hi, Brian. It's one of those things. I don't like to overstate the importance of any one single company's earnings, but if there is a single company whose importance I'm going to rely on, it's NVIDIA. The bull market that we're in has been predicated on enthusiasm for artificial intelligence, and there is no company more central to the AI trade than NVIDIA. If they give us the all clear and say that companies are continuing to spend and it's all systems go on data centers and chips, then we get a nice rebound. If they don't say something positive or market friendly, we're going to see this continue.
Yeah, okay, so let's go through either scenario, Steve. They come out wildly positive numbers. We know the numbers are going to be big, but wildly positive guidance, the positive commentary that you just referenced, good for NVIDIA. How big of a deal, though, is NVIDIA to the macro market, being in hundreds and hundreds of ETFs? Oh, and by the way, the options market also relying, I think, heavily on NVIDIA.
Well, NVIDIA is the center of this ecosystem, Brian, and that's really the key to it. Think about it this way. Their biggest customers are the other Mag 7 stocks. And so, yes, mathematically, it's quite important because it is the biggest stock in the index and therefore the most important. But there's others that are close, Apple, Microsoft, things of that nature. But in terms of market psychology and in terms of really the fact that this is, the standalone tech stock for this time, you've had most of the other big stocks report a month ago. Now it's basically NVIDIA and the retailers. So it's a different characteristic. And so I think we're going to be hungry for the fresh data that they can provide. And again, I think a lot is depending upon whether they say good things. Now, one thing going into the numbers, the stocks come off a bit. Some of the other times we've gone into the numbers on highs and the stock reported great, they reported everything hunky-dory and reported good guidance, and the stock did nothing because it was already priced in. Now I think we've had a little bit of a pullback in the stock. So you do have some more room for upside. Yeah. And what we're seeing in options activity is the skew is very flat, meaning people are just as likely to be playing an upside as they are playing a hedge downside.
Well, what if they come out with guidance that is not as good as some hope?
Your guess is as good as mine on that one because we've already been going through this risk-off sentiment. We've seen customers using this as an opportunity to buy dips, and so if the guidance is such that it causes other institutions to start selling, and remember, we've seen SoftBank, we've seen Peter Thiel, we've seen Viking Global, also all selling out their positions. If this is a catalyst for other institutions selling their positions, that could get pretty ugly, and that will spill out beyond just NVIDIA. So there is a lot riding on this.
Yeah, and now we're focused on one stock, NVIDIA. And why is it so important? Well, let's count it. It's almost 8% of the S&P 500. It's almost 10% of the QQQ. It's the #1 weighted stock in the XLK, the technology ETF, and the semiconductor ETF. So this is where traders are focused now. And then technically, let's see if we get that bounce back to the 50-day moving average. NVIDIA tested 185, a key level to watch there. But as NVIDIA heads into this earnings, it's doing something it hasn't done in the last 2 years. It's selling off. It's down 12% from its peak. So we aren't about to take another leg higher. We're about to resume that leg higher into the end of the year. So that's why it's so important.
I got a question today from somebody. They asked me off air. They said, are we in an AI bubble? I said, I don't know. But the one thing that does worry me is just how big these stocks, to your point, have become in ETFs, in options, in derivatives, in Delta One, which is a sort of a complicated Wall Street strategy. Is there any part of you that worries that there's more ETFs than stocks right now? There's just too much attention and size and focus on NVIDIA and a couple of other stocks?
It's concerning, but they're the leaders for a reason. These are the 7, the 10, dare I say. We had Broadcom and we throw in Berkshire, give them a shout out. The biggest stocks in the world for a reason. And when the biggest stock has a chance to lead us back and get the metas to a mean reversion, would lead to a nice rally. An Oracle, which has been beaten down. We get a lift from that on the tails of NVIDIA. That's why it's so important. Was there froth in this market? Sure. We saw it with some of these crypto names, these high-flying IPOs, the quantum stocks. So they've deflated. You know, you talk about some of the Oklos of the world. They've come back to normal. So I think we've taken some of the froth out of this market, and we focus on two things. Fed policy, we'll get the minutes tomorrow. That shouldn't have the impact, but we'll go back to earnings. And guess what? Nothing's changed on the earnings story. The growth has been there. So if NVIDIA can just give us a nice sign that things are progressing nicely, we don't have to crush it like they have in the past, but just hold these levels. I think we're set up for a nice year-end rally. And I have an RBI for you as well.
Okay.
All right. October 29th marks the recent high. We have only made a high in the S&P 500 going back to 1950 in October 6 times. The last time was 2007. That is ominous. But to me, I think the stage is set that we buy this dip. NVIDIA leads us. We're going to go and get back to those old highs by the end of the year, and we will be knocking on the door at 7,000 sometime in mid-December.
So fast forward to right now. In the minute, folks, there's some fodder out there for a nation like ours, a nation of doubters, like this morning. A big deal announced by Anthropic. Here's the thing, though. So Anthropic is going to buy $30 billion worth of Azure's compute and adopt the NVIDIA system. NVIDIA is going to invest $10 billion into Anthropic, and Microsoft is going to invest $5 billion into Anthropic, and there you get the circular thing, right? I want to bring in now Winthrop Capital Management, their CIO, Adam Coons. Adam, I mean, these are the type of deals that have people concerned, right? The circular financing, they point to some of the shenanigans they saw back in the dot-com period. Are you concerned?
Well, sure. I mean, you got to have some concern. You got to have some doubts. That's what investing is a little bit about, right? If you're just all in all the time,
but
FOMO,
these kind of deals, like, I mean, listen, NVIDIA's got all the money in the world. I keep saying what they're building is, in my opinion, a sort of modern day version of Berkshire Hathaway. You know, they're investing in a bunch of companies, and Google sold almost 300 companies that didn't make it. That's, I mean, that's right. What these guys do. They have all the money in the world.
Yeah, they do. And so, yeah, this is a lot different than some of the things we've talked about in the past, is that it really is, very early innings of this AI story.
Right.
That you can't draw complete parallels to the, the internet.com boom. Are there circular pieces? Yes, but that's business, right? That we sell to each other.
Right.
And so we're early innings. AI as a whole is definitely not in a bubble. This is something we're going to continue to use over and over again.
You gave us a case for a bubble and a case for a boom.
I did.
Right. So let's go with the bubble.
All right. So there's the obvious things with the bubble, right? There's a lot of concentration. We've got some stretched valuations, and you're hearing that valuation word thrown around a lot. And then obviously you've got really high sentiment from investors. And, you just guys have that FOMO mentality right now. So they're dumping into these stocks really aggressively.
Let's bring that back because we got to get the boom, folks. We didn't see the boom part yet.
We got to have the boom, right?
All right, eyeballs versus earnings. In other words, this is real.
Yes, the reality is, if you remember back to the .com, that it was all about eyeballs, and there wasn't any real money behind it. They were just trying to get as many eyeballs because it was new. But now we have real earnings behind this.
Right.
And so that goes back to those earnings are coming from real demand. So that's the biggest difference here. And then when you look at valuations are by no means, outrageous. And when you compare this to what we saw in the .com, when you were having 100 times earnings, something like Google is still mid-20s earnings. I would say that's fairly okay.
Right.
All right, I hope you're all doing well today and staying calm in this market. There have been multiple important NVIDIA announcements. Today, NVIDIA, Microsoft, and Anthropic announced a strategic partnership. Under the partnership, Anthropic is to scale Claude on Microsoft Azure. Anthropic is to adopt the NVIDIA architecture, and both NVIDIA and Microsoft are to invest in Anthropic. This is a very big deal given the history between NVIDIA and Anthropic, which I'm not going to get into in this video, but I'm sure many of you know what I'm talking about. Anyway, under the partnership, Anthropic has committed to purchase $30 billion of Azure compute capacity and a contract additional compute capacity up to 1 gigawatt. And for the first time, Anthropic and NVIDIA are partnering to establish a deep technology partnership to support Anthropic's growth. The two companies will collaborate on design and engineering and optimize future NVIDIA architectures for Anthropic workloads. Anthropic's compute commitment will initially be up to 1 gigawatt of compute capacity with NVIDIA Blackwell and Rubin systems. NVIDIA and Microsoft will each invest $10 billion and $5 billion respectively into Anthropic. If you're unfamiliar with Anthropic, they primarily serve enterprise clients, and their business is growing extremely fast right now. And this partnership is a very big deal because up to this point, Anthropic has primarily used alternatives to NVIDIA's hardware, such as Amazon's Trainium and Google's TPUs. But now with today's announcement, this partnership marks a key turning point between the two companies, and moving forward, Anthropic will be a large customer of NVIDIA's. And I think the return on NVIDIA's $10 billion investment in Anthropic will turn out to be fantastic. Anthropic is expected to be cash flow positive by 2027, and their business is scaling extremely fast. This partnership is very positive news. Also today, the president said that Saudi Arabia has agreed to invest $600 billion in the U.S., and that number may go up. And the Saudi crown prince then said that Saudi Arabia will increase their U.S. investment to $1 trillion. This includes investments in AI infrastructure. The president also said today that they're negotiating chip export licenses to Saudi Arabia. And later in the day, the White House announced that the two countries have signed an AI memorandum of understanding that gives Saudi Arabia access to leading-edge American AI systems from NVIDIA. As I've said in previous videos, I'm expecting certain large-scale sovereign AI deals to start to show up either in revenue or revenue guidance, either on NVIDIA's Q3 or Q4 reports. Looking ahead, we have NVIDIA earnings this Wednesday, November 19th after market close. We're expecting revenue growth acceleration given NVIDIA's Q3 guidance and due to the swift production ramp of Blackwell Ultra. As a reminder, we were expecting Blackwell Ultra production to ramp substantially starting in September. And Foxconn just recently reported very strong earnings and guidance, saying that AI rack shipments increased 300% quarter over quarter and are expected to double in Q4. Foxconn's very strong report is a strong indication that Blackwell Ultra production has ramped substantially in a very short amount of time. That bodes well for NVIDIA. I also expect Jensen to talk about agentic AI on the earnings call, given his previous commentary. I'm expecting a surge in compute demand fueled by agentic AI that extends well into 2026. I also expect a key question on the earnings call to be the question about the useful life of a GPU, given Michael Burry's recent comments. In case you missed it, Michael Burry recently posted on X saying that hyperscalers are understating the depreciation of GPUs, and that by extending the useful life of those assets, they are artificially boosting earnings. I disagree with this analysis, as I've discussed in previous videos. In short, I disagree with the premise that the hyperscalers are claiming a longer useful life on the GPUs in order to artificially boost earnings. Rather, I think the hyperscalers have simply come to the realization that the useful life of the GPUs is longer than what they originally estimated due largely to two factors: NVIDIA's continuous improvement of older generation hardware through software, and second, a severe shortage of compute in the face of extremely strong AI demand. Since the world is compute-constrained, developers will use whatever compute they can get their hands on, including compute that under normal circumstances would be considered older generation. This extends the useful life of the hardware. Additionally, we have to consider inference. Real-time inference substantially increases the need for more compute, and the introduction of advanced reasoning models and real-time inference is something that Burry fails to mention in his post on X. It's not enough to simply train AI models. You then have to provide access to those models at scale through real-time inference. If we thought training required a lot of compute, what about real-time inference processing billions upon billions of tasks every single day? This drastically increases the need for more compute in a world that was already compute constrained, and thereby increases the useful life of the compute that is available. Now, if we eventually get to a point where the world is no longer compute constrained, then that changes things. But I honestly think we are at least 3 to 5 years away from something like that happening, if it happens at all. Jensen appears to agree with this time frame, given his commentary on the BG Squared podcast back in September. Also be prepared for November 25th. That's when Burry is revealing something else. I think he may be starting a blog, but I'm not sure. And Burry told us in his post to expect more detail about GPU depreciation and the hyperscalers supposedly overstating earnings. I would not be surprised if tech stocks, including stocks like NVIDIA and were to react negatively when that is released, even if Burry's analysis turns out to be incorrect. So be prepared for that, just in case on November 25th, we may see some volatility. Now going back to NVIDIA earnings. I expect Jensen will likely get some question regarding this graphic. He showed at GTC in October, saying NVIDIA has orders on the books for $500 billion of cumulative revenue from Blackwell and early ramps of Rubin through the end of 2026. I want to remind you all that this is cumulative revenue for both 2025 and 2026. Jensen was not saying that we're going to see $500 billion in just the next 5 quarters. He's saying that by the time we get to the end of those 5 quarters, NVIDIA is looking at $500 billion in cumulative revenue from Blackwell and Rubin. Cumulative is the key word here. There was some confusion about this topic online after Jensen's GTC keynote because many people online took Jensen's words in a Bloomberg interview out of context. In that interview, the interviewer assumed the $500 billion in revenue was over 6 financial quarters, and Jensen responded by saying, quote, 5 financial quarters. But again, he was talking about cumulative revenue over a 2-year period. He told us on stage that 6 million GPUs have already shipped. That would be about $150 billion. And that would mean we're looking at roughly $350 billion in Blackwell and Rubin revenue over the next 5 financial quarters. Add the $350 billion yet to ship to the $150 billion that is already shipped, and you get $500 billion or $500 billion in cumulative revenue. Now, let's talk about what to do ahead of earnings. I'm not a financial advisor, and so I cannot tell you what to do. That said, I will share some thoughts for you to consider that I think may be helpful to you. First, you need to have a clear understanding of what type of position this is. Is this a short-term trade, or is this a long-term investment that you intend to hold for multiple years? Once you know the answer to that question, the decision-making process becomes much easier. Short-term trades are a more complex situation, but if I'm a long-term investor, I would prefer to hold through earnings, go through the earnings report, listen to the earnings call, and take some time to process the results. And if nothing has fundamentally changed about the company in a negative way, and the company is still making great progress forward, then I have no reason to sell. It's that simple. Now, I do want to offer a word of caution when it comes to holding options through earnings. Typically right before NVIDIA earnings, volatility rises notably, juicing up options premiums. And then the day after NVIDIA reports earnings, volatility usually plummets, pulling down option premiums with it. This is what is known as implied volatility crush, or IV crush for short. An IV crush is no joke. And so for me personally, I don't want to hold any option position through earnings because the implied volatility crush after NVIDIA earnings is usually very substantial. Again, I'm not telling you what to do, and this is not financial advice. If you need help with your situation, feel free to reach out to a certified financial professional who can help you with your unique circumstance. While I expect NVIDIA to report great results, I don't know how market participants will react in the short term. But regardless of how the stock trades in the short term, I continue to be bullish on NVIDIA long term, and I seriously think this company still has plenty of runway ahead of it. The reality is that the world is severely compute constrained in the face of very strong AI demand, and that will likely continue for at least the next few years. Over the medium term, I'm expecting a surge in compute demand fueled by agentic AI that extends well into 2026. After that, I think the next major surge in compute demand will likely be fueled by physical AI. Physical AI is a massive long-term growth opportunity for NVIDIA, and I don't think it gets enough attention. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested, and NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack. Physical AI will fundamentally transform society, and NVIDIA stands to benefit massively. This is not getting enough attention right now, but I think it will get a lot of attention in 2026 and 2027. In addition to physical AI AI, NVIDIA has multiple other large long-term growth opportunities, including sovereign AI, enterprise AI, many AI-native startups, telecommunications, and 6G and quantum GPU supercomputing. Jensen believes that quantum computers will not replace classical systems, but that they will work together and complement each other. These additional opportunities in customer segments will increase the need for compute even further. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.